I can see participants pouring in. A very warm welcome to everyone. We will quickly start off in 2 to 3 minutes, waiting for everyone to join in. On behalf of entire 360 TF team, I thank everyone for joining in. We will just start in shortly in the next 2 minutes. The Q&A will remain open for all the participants. You can put in your questions and we will definitely try to answer it post the session. I think we can begin. A very warm welcome to one and all present here. I feel extremely gracious that so many of you all have been able to make it to decode the Red Sea crisis with our key speaker, Ms. Rajini Ravi. 360 TF, being one of the largest trade finance aggregator, understands the need of the hour and that these economic crises will bring us closer to getting ease of trade. The Red Sea, one of the world's most densely packed shipping channels, lies south of Suez Canal, the most significant waterway connecting Europe to Asia and East Africa. About 12% of global trade passes through the Red Sea, including 30% of global container traffic. Billions of dollars of traded goods and supplies pass through Red Sea every year, meaning that delays there can affect petrol prices, the availability of electronics, and other aspects of global trade. I do not want to speak much on this topic further. And without further delay, I'm glad to welcome our speaker for the day, Ms. Rajini Ravi. A brief description of Rajini is here as follows. Chartered accountant with over 3 decades of post-qualification experience, including 23 years in Dubai, and she has demonstrated success in digital transformation, organizational restructuring, maximizing financial performance, driving growth, and enhancing team capabilities. Her extensive expertise encompass in manufacturing, trading, FMCG, travel, media, real estate, hotels, and private equity. Her experience with companies like Estamar World, Nakhil, Forza LLC, Intermedia Advertising, etc., is a testimonial of her diverse knowledge. As a chartered accountant, she has constantly demonstrated a self-motivated and achievement-oriented approach, specializing in various facets of finance, including business transformations, financial reporting and consolidation, audit planning, IFRS compliance, forecasting and budgeting, and much more. Currently serving as Global Head of Finance Operations at Inchcape Shipping Services, she's at the forefront of steering financial management and operational efficiency on a global scale. With an excellent track record of overcoming complex big business challenges and strategic decision-making with fast-paced and high-pressure environment, we are here to welcome Rajni for this topic. Rajni has been kind enough to address on this sensitive topic and is here to share her experience in personal capacity, not soliciting any business or being biased to any economies. Let's hear Rajni and take cues on what comes our way in trade with Red Sea crisis. Over to you, ma'am.
Thank you, Himakshi. Thank you for those gracious words. Thank you for the introduction. It's an honor really to address this August gathering. Thank you again to inviting to be a part of the 360 TF platform's customers. Welcome to all once again. Like Himakshi said, I'm here in my personal capacity, and as required, I need to give a caveat that the opinions expressed here are my own and do not reflect that of my organization that I belong to. Thank you so much. Without much ado, let's get cracking. I have tried to give an overview of what is happening now, what it implies, and especially with respect to the shipping industry, what are the impact that we can see in the businesses going forward. So let me start my presentation. Let me know when you're able to see it up on screen, please. Himakshi?
Yes, it is visible and on the presentation board.
All right. Thank you. One sec. So navigating the Red Sea crisis, that's the topic that's been given. And I know all of you are already pretty much aware of what's going on. I've just brought to light some of the headlines that you might have read in the various international publications at the various points and the events that have transformed our lives over the past 2 months. Though it looks like snippets of happenings on a daily basis, there's a big story behind it. And unfortunately, it is big enough to impact all of us in our daily lives. So let me take you through the timeline of how it actually unfolded. It all started with the Hamas conflict with Israel. And we are talking about as back as 7th October 2023. For those of you who don't know what Hamas is, it's actually an Islamic resistance movement. And they are the ones who have occupied the Gaza Strip. So essentially, they are always at conflict with Israel. So this all started on the 7th of October when they raided the Israeli border, and there were some heavy casualties on the Israeli side. Obviously, this means that Israel is not going to keep quiet. They attacked the Gaza, and the Houthis, who are actually a religious group which is controlling almost most of Yemen, and they are a part of the Iran-led axis of resistance. So they are basically viewing Israel, US, and the wider West as their adversaries because they want to control what's happening in the Red Sea. And they kind of retaliated by attacking all the ships that pass through the Gulf of Aden and through the Red Sea. And it all started on the 19th of November. And there were very many instances throughout December where the various ships were attacked. Though the Houthis claimed that they're only attacking ships with Israeli connections, it soon spread to indiscriminate attacks through missiles, UAV, anti-ships, ballistic missiles, and stuff. But the first piece of resistance or fight back came when the US wanted to throw its weight behind defending this waterway. So the first time on the 16th of December, they actually shot down one of the Houthi UAVs. And after that, the attacks continued unabated throughout December on various ships belonging to different ownerships and different country flags. However, towards through when on 18th of December, US actually announced that it's going to have a alliance for the security of the Red Sea waterway that was nicknamed Operation Prosperity Guardian. And this has been formed with a coalition of almost 20 countries, some of whom have opted to be anonymous. So we don't know who exactly has put their weight, but we do know UK and other countries have been openly supporting by sending their fleet. Through the various attacks in December, escalated toward the end of the year, unfortunately. And that is when that this alliance attacked the counteroffensive. And then nearly 10 Houthis were killed, and that seems to be the major military activity towards the end of the year. Unfortunately, that was not the end of the story. And in Jan, they continued to have various attacks. And the one on the 10th January was the biggest by far, where the Houthis launched nearly 21 missile attacks on the US and UK Navy ships. Obviously, this was not going to be taken lying down. And the military, in fact, retaliated by hitting the Houthi sites in Yemen. Now, this meant that the activity that was earlier contained with the terrorist group of Houthis and the ships is now spreading and taking on a political favor in terms of Yemen coming into play, and thereby Iran also getting into the play. And as on date, as we speak, as late as on 16th, we have had another missile attack. So unfortunately, this is not the end of the story. And like I said, though the Houthis claim that they are going to go only by the affiliation of the ships, it has now spread to being indiscriminately attacked by anybody who dares to cross the Red Sea. And on the political side, this is kind of extending beyond just Yemen and Israel. And it's also Iran is trying to get into the action. They have actually announced that they will not hesitate to enter into military operations if this continues. So, this is just to give you a flavor of, most of you would have followed it on the newspapers. But what it has happened is what started off as a single country's offensive has now kind of spread into a political scenario where almost the entire world is being sucked into the scene of action. If we move on, I just wanted to bring to light why it is so critical for the world, right? This is the scene of action as we see it. All the attacks, initial attacks, took place from this side, which is called the Bab el Mandab Strait. It's just a 20-kilometer small stretch of waterway, but you can see from the map how narrow and how critical it is to actually enter into the Red Sea waterway. So the scene of action is now the Gulf of Aden, and it is spilling over to all over the Red Sea. And why is this waterway so critical? Because it's leading into the Suez Canal. And why is Suez Canal so important? Is because it is one of the two critical waterways in the world, which forms that main shipping route. One is the Suez, another is the Panama Canal, which is between the North and the South Americas. So if you look at this map of shipping routes that I've drawn up, uh, the whiter it is, the more critical the route is. So if you can see easily, the thickest of the lines is following from the east onto this Gulf of Aden, onto the Suez Canal, onto the Mediterranean. And that's what it serves both Europe, and then it goes transatlantic to US too. So now you will know how critical this is, because if this waterway is not going to be open for business, the only other option for the ships is to come all the way down below the southern tip of Africa, called the Cape of Good Hope, and traverse back all the way up to Europe. So this will give you a sense of what kind of ramifications we can face just because of this one small strait being blocked by this terrorist activity, right? Bringing into context, why is Suez Canal so important? Why is it we have to pass through this perilous territory to get to Suez Canal? Got to give some facts to bring it into context. It's the main artery for all the east-west movements. All the goods and the fuel from Asia has to make their way through the Middle East and go on to Europe and United States. Um, to give some fact file about Suez, it is the bone of contention for many, many years between the various superpowers, because they realized soon how critical it is as a waterway. The interesting thing is it was inaugurated way back in 1869, but until 1875, it was controlled by a company in which France had the controlling interest of 56% and UK had 44%. It was only later in 1888 that this was neutralized, and the free use of Suez Canal was made available to all the countries. In 1956, Egypt actually nationalized this waterway, and it came under the control of Egypt. Obviously, this meant that the Western powers of those days did not have control over the Suez Canal. So there were two major wars that were fought, which led to the closing of the Suez Canal. This was the first of the troubled waters that we were entering into just because of the criticality of this passage. So the first was the tripartite aggression on Egypt, which lasted from October to December in 56. And this was, Egypt won that war, which is famously called the Suez War. The next was when Israel again attacked the Suez, and along with its allies, and the canal had to be closed for nearly 8 years between 67 and 75, and this was finally reopened in 1975. Now, this is one of the heavily defended strategic areas because of its vital role in the globe's transportation infrastructure. Why it is critical? Like Himakshi mentioned in her opening remarks, nearly 12% of the total world trade passes through this Suez Canal. That means it is 7% of total globe trade and 30% of the container ship traffic. And this means nearly 50 ships transit the Suez Canal every single day. As of 2020, almost 19,000 ships passed through this, and the net tonnage of 1.2 billion tons. That is humongous because, in terms of trade value, the goods that are transported, it's worth 1 trillion US dollars. So that gives you an idea of the impact that it's going to have on the global businesses if this waterway is shut down for whatever reasons, right? Uh, Most of you would have seen this picture. It's almost as famous as our movie stars pictures in India because it was the most widely circulated uh, picture, I think, in 2021. This refers to the 2021 Suez crisis, now where the 400-meter long container vessel, which had almost 220,000 tons of cargo on it, came stuck because it got in the wind draft and it was stuck diagonally. This is important to know why, because Suez, though it is so critical, it's just 205 meters wide and it's just 24 meters deep. And this has been dug man-made water canal, and they've tried to keep it as deep and as wide as possible, but there's a limitation to what kind of cargo it can carry. Actually, because of the modernization effort by the Egyptian authorities, which is now under the Suez Canal Authority ownership, they've actually tried to create a northern passageway and a southern passageway to avoid the congestion. But still, in certain critical areas, it's very narrow. So one large ship, container ship, which came stuck in a diagonal position, it couldn't move left or right. That literally brought the world to a standstill. So if you, like I referred to earlier, this is a diagrammatic representation of how much longer the ships will have to traverse around Africa just because of this one stoppage in this critical area. It took 6 days, just 6 days for the authorities to clear the ship. But those 6 days was a catastrophe in shipping terms. Around 1 million TEUs, those who know are in the container business would know the volume that we calculate as TEUs. 1 million TEUs were involved in the backlog, and 494 vessels were stuck. This is just a satellite representation of the kind of traffic jam that we had, if you would like to call it, because the Ever Given got stuck, right? And the last of the ships were able to clear the Suez Canal only on April 3rd, which, if you see in terms of calendar days, it's hardly 10 days from March 23rd to April 3rd. But the impact was tremendous. Nearly $9.6 billion worth of trade was held up. That's almost 6.7 million per minute of delay. And the revenue loss for the canal authorities was 15 million per day. So the total trade loss for those 10 days almost amounted to 54 billion. And this is not taking into account the knock-on domino effect. This is purely based on the delayed cargo shipments that got stuck in the waterway because of the Ever Given blocking the way, right? And because of this, cost of freight rose humongously, as high as 47%. And those who are in the business would know that normally, as a thumb rule, we take 4 to 5% of our business cost as due to shipping and transportation. Imagine that going up by 47%. It would mean a major fluctuation in your profit margins unless you really react quickly. The annual trade growth itself was brought down by zero point 0.4 percentage points. And irrespective of what kind of cargo got stuck, the ramifications were felt across all businesses, whether you're a shipping operator or whether you're e-commerce or whether you're just a retailer who's trying to get access to your raw materials and goods, right? Um, I think this kind of gives you an idea of why everybody is getting extremely sensitive about what's happening currently, because the nature of the blockage might be different, but the security concerns that have arisen in this waterway will have a similar business impact going forward if not resolved soon enough. So before we go on to find what exactly is the kind of business impact that we will have, I want you to understand how the shipping industry is kind of structured, right? There are many, many shipping lines carrying umpteen number of cargo ships around the world. So, but in essence, if you see the control of the market, it rests with three major alliances. They are not, this is not based on legal ownership. It is not to say all the blue colored companies are under one legal entity, but it is more of how they operate as alliances by controlling their cargo movements and the ships. This has a tremendous impact on the capacity that is available for businesses to move their cargo from one end of the world to another. The three main groups. First is the 2M, which basically is Maersk and its allies, Maersk, MSC, Hamburg Sud, and HMM. Then it's the group, which again is Hapag-Lloyd, UASC, NYK, K-Line, MOL. And then last but not the least is the Ocean Group, which is CMA, CGM, COSCO, OVCL, APL. Between these three alliances, they control almost 80% of the total shipping line capacity. So this is just to give you a background, because when we go in further into the slides and see the impact on the freight rates and thereby the shipping costs, you will understand that any of the decisions that these three major groups take, the industry will kind of follow suit. So that's a clear indication for you as to which way the wind is blowing. Coming to the shipping cost, the main components that impact the operating cost of any shipping line, you can see that it's almost 50%. Half of it is due to fuel. And if you look at the World Container Index, uh, it has shot up hugely between December and Jan, simply because of the drama that's playing out in the Red Sea. And so people perceive security risk, people perceive that they might have to take a detour, and thereby there'll be higher running costs, there'll be a higher cost of operation, thereby the container index goes up. So any, how critical or how sensitive the world trade is to transportation cost is a small percentage increase in transport has a huge negative impact on the trade volumes that are being traded across the globe, right? And as the Red Sea crisis persists, we have already seen some major movements. There's almost a 25 to 30% increase in the freight rates. Oil prices have been impacted because oil is there are fuel dependent countries who depend on the tankers to import their energy requirements. So that has jumped to almost $80 per barrel. The Brent crude is the kind of a standard indicator on the crude oil prices, and that's hit 80 because uh, some of the major world powers are affected by this Red Sea crisis. There is also an insurance premium surcharge that's been added because of the perceived security risks. That's as high as $5,200. Now we come to the container rates. They have jumped hugely by 267% just in the last 2 months between November and December. CMA CGM, which is one of the three major global conglomerate that I spoke about in the earlier slide, they have almost doubled the price of a 40-foot container. Is followed suit by MSC and also Maersk, CMA, CGM, and Hapag-Lloyd. All three of the top shipping lines, they've started charging a surcharge, citing transit disruption. What they mean by this is they have decided to deviate their ships not to pass through the Red Sea and take that risk, rather to divert them through Africa, the Cape of Good Hope that I referred to earlier, which means it's an additional 3,500 nautical miles. That means additional fuel cost in running the ship. If you take these into account of shipping cost, we need to know what drives the shipping cost other than just the fuel. The two other major factors would be the distance it has to travel, like I said, and also what kind of cargo it carries, what kind of tonnage it carries, the volume and the weight, and the port to which it is headed. Also take into account the seasonality, because we are just in the run up to the Chinese New Year on Feb 10th. And as you know, that is the peak demand season for all the goods in and out of China. And all the ships are already running full, which is one of another reason why the freight charges are being increased. Consumers are rushing to have their goods shipped before the celebration. So China is easily the world's biggest exporter. It is going to come to a week-long standstill. Imagine the kind of backlog it will give rise to. If the shipping lines are running normally, it still creates a backlog for Chinese New Year holidays. But imagine when there is already a choking backlog in the Red Sea, and already the ships are running late by 10 to 15 days by having to travel across Africa. Imagine there will be no ships, thereby there will be nothing to be loaded, and therefore the goods that are expected to be exported out of China will not get out to the rest of the world. So the Shanghai Containerized Freight Index, which is basically a tariff rate that indicates Chinese, this one, it has almost doubled in the last few weeks. So this is just to give you a flavor of the impact that we are likely to expect in the business, having taken into account this percentage of cost towards transportation by ships. Like I mentioned in the earlier slide, there are two main factors that drives the costing. One is, of course, the shipping volume, and the other is the shipping distance. Let's look at some facts on the volumes. The international maritime trade volumes has been growing year on year. In this graph, the white one is the actuals, and the last gray portion is actually an estimate for look forward for 2023-24. And as you can see, across all segments, it's growing, but the peak is on containers in terms of the percentage of growth. Also, if you look at the world fleet, it's been growing year on year. In 2023, it was really huge, and the outlook for the next few years is that it will grow at an average of 2.5% to 3% max. Yeah. And if you look at the seaborne trade, and if you look at the size of the container ships or the cargo ships over the years, in 1970, the capacity in terms of million tons is only 2.6 million. But look at where we are in 2019, 2020. It's gone up 11 million tons per ship. And why is it that we are looking for mega ships to carry multi-million tons in one go? It's because of this operating expenses curve that you can see. So beyond 5,000 TEU capacity, the operating cost starts falling drastically for the shipping line. So if you are a businessman who owns a ship and who are running the cargo, your endeavor would be to keep it at a minimal operating cost, which is easily possible if these mega container ships. And also this graph actually shows you the quantum jump that we have made in increasing the capacity of the container ships over the years, especially between 2005 to 2010, it's gone up multifold. So this tells you that we'll have these huge ships carrying multi-million tons of cargo across the globe, which are now stuck or which are now delayed. So this gives you an impact of what's going to happen to the business. Similarly, on the shipping distances, this is the distance traveled per ton of maritime cargo. Again, you can see across all segments, it's on the raise. And it's not just oil and energy and fuel that we're talking about. We are talking about essentials like grain, and also about dry bulk, which essentially means all of the essential stuff that you need on your day-to-day lives. This kind of gives you an impact of what has happened, because all the ships are now getting diverted to the Cape of Good Hope. This was as of January 12th, which is just 4 days ago. And you can see the kind of massive traffic that has congregated around this shipping waterway, because everybody is now trying to find a deviation from the Red Sea. So this will give you an idea of what's the volume of delay that you can actually expect in terms of tonnage of goods that are transported. We already live in a very volatile world. Prior to this Red Sea crisis coming, it's not like we were We were in a very peaceful environment. The Ukraine war had already upset the energy and oil transportation equation. And you can see that in 2020, after the Ukraine was started, you can see the number of average miles that are being taken to take circuitous routes to reach oil to the different parts of the world has actually gone up. So, in short, in 2023, all the oil products, the LPG, the crude, they all had to see an increase in the ton miles, and this far exceeded the actual trade volume growth. So, in effect, we were going in the negative direction in terms of cost associated with shipping is concerned. Apart from the shipping volume and the shipping distances, there were so many other factors at play globally, which will actually have an impact on the business cost. So let me just quickly run through the various impacting factors that we're looking at today. Of course, we started with the pandemic in 2020. This was the first major global supply chain disruption that the world has seen, and we were caught completely unprepared. We did not have a plan B, and we literally had to face huge increases in container freight rates. We are somewhere at $6,000 now, but it hit as high as $14,000 during the pandemic. That is just to tell you how much worse the situation was back then. Then Russia's war on Ukraine, like we already mentioned, it has already upset the geopolitical stability in terms of trading. 2023 also saw Panama, which is the other critical waterway that I mentioned, face the worst drought in decades. So it slowed down the passage of the ships because they had very little water. So they had to restrict the number of ships that could pass through the canal in a day. This ongoing conflict that we are currently dealing with, which started with Israel-Hamas conflict, went on to the Houthis taking revenge, and now Iran, US, UK, and the entire world is being drawn into this to kind of counterbalance the security risks. Unfortunately, we still do not have a resolution in sight because it's taken more of a political flavor than just a regional conflict. So the global players will have to get involved. And there is also the hidden reality of how much this war is going to cost and who's going to foot the bill. So we all know that the superpowers like the US or the UK or whoever is the Western influencers, they have the wherewithal to probably launch a counteroffensive on the rebels and silence them like they did in other parts of the Middle East. But it's going to take a heavy toll, both on the financial and on the operational cost, right? Uh, Apart from these geopolitical risks, we have the trade tensions that's already going on between the United States and China. The trade imbalances is often overlooked as a major factor that comes into play. So that's something that we need to keep in mind. The BRICS, or the third block, as people like to refer to it, is of late widening. So the original members of Brazil and India and all that is now getting expanded to include newer members of Saudi, Iran, UAE, Egypt, and Ethiopia. This means that anything that affects any of the member states is going to be kind of drawn into the world arena. So this geopolitical compliance is going to be extremely critical going forward. We already have the sanctions against Iran. And so the compliance with the various sanctions imposed by the various countries on various other countries, this is a nightmare for supply chain professionals. And it adds a huge level of complexity to the way global trade is being conducted presently. I would like to just summarize in conclusion as to what kind of business impact we can hope to see, why it is so critical, why does shipping industry call the shots, why is it a hot topic of discussion, is because 89, really 90% of the trade volume and 70% of the value of trade is passing through these world's transports, right? The Suez Canal alone will cause huge disruption or trade downstream. We have seen the kind of number impact that has happened way back in 2021. And though that was just a short term for 6 to 10 days, this has been going on for almost 2 months. And unless the shipping lines get comfort that their security concerns have been addressed sufficiently, they are not going to divert their ships through the Red Sea anytime soon. This political uncertainty will call for all the business houses to adapt quickly and start strategizing. Many of us would have done the budgeting cycle way back in Q3 of 2023 when we were not even aware that this kind of scenario is going to play out. So this calls for a complete revisit of all financial assumptions that you have made for your business outlook. And it calls for a very quick turnaround in terms of an alternate action plan. Apart from this, we need specialized skill sets to handle these kind of volatile environment, risk assessment, scenario planning, diversification of supply chain will all become key skill sets in 2024. And those companies who are fortunate to have these kind of professionals trained to do this is going to really benefit because they are worth their weight in gold. E-commerce is a major factor in global trade today. And I have a slide in the appendix which shows some interesting facts about how shipping can actually impact your efficiency or retention of customer base or growth of business in e-commerce, because the last mile delivery is extremely critical in this e-commerce industry. And surprisingly, as much as 47% of your customers will actually move to more sustainable means of transport. And so it is interesting to see the equations play out there. Operating cost, we have been through that in the previous slides, but the control by on taking certain strategic initiatives is important. Shipping industry is one of the oldest, as we all know. It's been around since previous centuries, and it's time. But unfortunately, the way we have operated shipping and transportation has not changed much intrinsically until very recent times. And digitization, automation is the call because too many of the processes are manual, people dependent, and highly cumbersome in terms of time consumption. So the industry as such is facing a severe challenge and pushback from businesses to modernize itself, to reinvent its processes, and to look towards automation. And more importantly, uh, climate change, sustainability, greener fuel has gained traction over the years. And we have had some severe targets set by the IMO, which is the International Maritime Organization, to cut back the carbon emissions by almost 40% by 2030, which is a very stringent target. And these are factors that we cannot ignore. And irrespective of whether it's going to cost me more or less, as a shipping professional, we will have to start investing in these initiatives. And as with any initiative, these are going to be capital intensive. These are going to drive up the operational cost for the shipping companies. And as with any other shipping cost, we will tend to pass it on to our customers, who are the businesses who transport the goods. And they in turn are likely to pass on the cost to their end consumers. So this rising associated cost, not just because of geopolitical risk or insurance premium, but also because of the industry initiatives that is driving us towards automation and sustainability initiatives, they will also drive up your operating cost. This means, in essence, that in short term, we have already seen a 15% increase of that World Containerized Index, but it would also mean that there'll be a significant increase in the freight charges, as we have seen in the container freight charged by the shipping lines, almost doubling or going up to $6,000. This is also going to be higher because of the, like I mentioned, the Chinese New Year demand cycle. Severe shortage of goods is going to drive up your cost. Also, in the medium term, shipping industry is not known to be the most reactive of the business. It's not as quick as an IT industry or an e-commerce to take feedback from the market and change its strategy overnight, simply because of the mammoth size of the fleet and the operations that we're talking about, and also about the n number of shipping lines that control the market. The normal lead time for a market to correct itself for any of a major development across the globe is 2 to 3 months. So this means today what you're seeing, the freight increase, is a reaction to what happened sometime in October, November when all these attacks started. But the complete stoppage of Red Sea and the diversion through the African continent of 80% of the world's trade volume is going to have a kind of a domino effect. You will see the rates not coming down anytime soon, because as we speak, what we see today in the geopolitical arena, that will sustain the rates for the next 2 months. So the medium term increase is also going to be dictated by the longer transit distances, associated fuel cost, and like I said, coupled with the trade imbalances and with China being impacted with the Chinese New Year coming in. Unfortunately, there is no fairy tale ending to the story. There is no immediate resolution in sight. Um, the root cause of the Houthi conflicts and the attack is the Israel war. And we all know that Middle East has been a pretty volatile playground for the world powers, depending upon their vested interest and their economic interest too. So we don't know how it's going to play out and how it's going to be resolved, but it certainly has come to a stage where collaboration across all the world economic powers is a kind of a prerequisite for any sustainable solution that will allow us to free up the Red Sea and the Suez Canal waterways for the future of the business. I'm leaving you because most of the audience, I believe, are from the Indian subcontinent. So I'm leaving you with just this flavor of the demographics of India's import and export. As you can see, as much as 80% of the Indian export market will depend on ships passing through the Mediterranean. If this means that the ships are going to take the deviated route, the longer routes, and it's going to be bring about an increase in the shipping cost, it's going to impact most of the export businesses in India. Luckily, on the other hand, on the import side, we are insulated because most of our imports come from Russia, China, and the UAE, which necessarily do not have to cross the Suez. However, the domino effect that I told you about earlier, if you are not able to source your raw material, you are already in deep troubled waters with your exports, then your production cycle is going to have a knock-on effect in your future export capabilities. So I know it is not a very deep dive and it is not industry specific, but spare a thought that I'm a finance professional and my understanding of what drives this business comes from my exposure to the operational problems day in and day out, because I now work for a shipping organization that is truly global in nature. We have a presence across 254 ports. And so we know, we get a sense of what's going right and what's impacting businesses across the globe. With that, I leave you. I have a few slides in appendix just so that you get a better understanding of shipping industry. I'll just run through the slides so you know what is there for your reading when we circulate it. These are certain fact files about the shipping in India. The point I was trying to make is nearly 95% of India's trade by volume is going through the maritime sector. So the impact is real and it is now. The present challenges for the shipping industry as a whole, like I said, sustainability regulations, digitalization, the human capital or the human resources, and like I said, unpredictable fluctuating cost of operations, because anything that happens anywhere in the world will have a repercussion here. What the future holds, again, these are the various innovations that are happening in the industry. And there are certain statistics on why sustainability has become so critical for us. So there's no avoiding the investment in greener fuel. And in fact, EU has come up with a levy if your ships do not meet certain standards in the EU ports. And that has already come into effect from 1st of January 2024. So the businesses will not be able to defer this cost also for you. Supply chain management, like I said, e-commerce, global supply chains are the order of the day. In fact, major shipping lines are investing heavily to offer end-to-end supply chain solutions. We already have a product that's being marketed by Maersk. My company is doing its own bit for its customers on a customized basis. So the growth of e-commerce is also going to drive the changes in the shipping patterns. And like I said, sustainability is key for this current generation. And shipping delays will cause you to lose almost 32% of your customers on e-commerce platforms. So these are factors that need to be kept in the radar before you take any business decisions. With that, I will stop the presentation. Thank you so much for your patient listen. I
Uh,
hope you all have taken away something worthwhile from what I've had to show. Glad to take questions.
Yes. So, I think most of the questions which came in have been answered. I'll just put up a few questions which did come in. Which countries are affected more by the Red Sea crisis? Again, has been answered. They would like to know more about the implications of the crisis and take view of how in this volatile world we can actually bring down the entropy. So I think most of these questions have been answered by you, and we really thank you for your time again, and coming up to us and being here for all of us to share across your views on Red Sea crisis means a lot. Any questions from any of the participants? Probably anyone would like to raise hands, or anything that comes up. We'll wait for a minute. All right. So, yes, I see one of. Yes, so this is the most common one. Can you share the slides? Yes, you can write to us on info@360tf.trade, and we will be sharing the presentations with all of you, whoever has joined the webinar. I'm writing that in the chat box, and we can get your requests on this ID for the presentation. I hope everyone has received that message. Yes. The PPT will be emailed to Mr. Lalit and Mr. Rana. Yes, Ms. Chandni, you can type your question in the chat box if at all possible. I'll unmute Mr. Mahesh Kashalkar. He seems to have a question. Mr. Mahesh, yes.
Yeah, Rajni ji, thank you for your well-balanced and complete 360-degree understanding of the crisis
Thank
for
you.
for all the participants. The question which I have in mind is, what is the resolution for this? Unless uh, there is a common platform where all the parties involved as well as affected should come together and put a peace proposal so that everyone gets benefited out of it. Otherwise, this 30% reduction in 40% reduction in carbon emission, which is a global threat, and unless it is perceived in that manner, nobody would participate
True.
into the positive contribution for towards this. So this is what I feel. What is your view on this? And another point from my side, I mean, the question from my end is, in case this cost would continue for a longer time, what is the solution for, if there would be an alternative uh, energy that the shipping, of course, it's an infrastructural change that they might have to do. based on the what sort of whether they run it on coal or diesel or gas or whatever. So
Yeah,
depending upon their usage of, uh, they would have to decide how they can keep the cost down and increase their business volume. That is a challenge for shipping companies as well as for the exporters and importers.
I
So
know. It's a very
thank you.
challenging time to belong to a shipping industry. I can tell you that much. But there are two parts to your question. If I may take the first one first, what is the resolution, and what kind of collaboration we can expect? Now, there are two aspects to any problem, right? Especially in the current scenario, as I see it, there is this geopolitical upheaval that's happening in the Middle East around the Red Sea. But you should also understand that the shipping lines hold a lot of economic clout for the respective countries wherever they have their businesses, right? And
True.
they are going to bring upon a lot of pressure on their respective governments to find a solution, because like I said, it's not sustainable that they say, okay, the freights can keep hitting through the roof and the ships can keep traveling thousands of miles extra and we are not going to do anything about it. At the end of the day, even the countries with political interest in the region are going to be impacted in a circuitous manner economically, because they are not self-sufficient in all terms. They are dependent on certain imports for keeping their economy going. And they are going to sooner or later find the cost of doing business unsustainable. So it is not going to play out for a very, very elongated period of time. But what is going to be the trigger to bring about that resolution is a $1 million question none of us can answer. But I can tell you from experience that these shipping lines have tremendous political clout, and they will sooner or later bear upon their governments to start taking their hardships seriously. That is to answer your first question. On the second part, uh, yes, uh, what can we do differently to make sure these costs do not impact our businesses long term? See, the factors that affect any business with respect to managing their shipping cost is dependent upon various factors. It depends upon the sources of your raw materials. It depends upon the market segments that you're targeting. Where do you have to export? Recently, I was speaking to a retail industry professional, and he said because of the recent shipping challenges, the Brazilian exporter, whose raw material was critical for his FMCG business, just point blank refused to send anything, right? That means there is a huge supply chain gap for him. How is he going to circumvent that unless he had diversified and has a plan B in terms of what is his alternate sources of raw materials? So businesses will have to think beyond here and now and start looking into the long term. Like people who invest in equity in share market, they tend to read the current trend, the medium trend, and the long term trend, and tend to take investment decisions. In my opinion, every businessman will have to start doing that risk management of his supply chain and plan accordingly, medium term to long term. For which reading all these geopolitical developments, commercial developments, trade agreements, everything is going to have an impact on the business. I hope I have answered your question.
So, ma'am, a lot of participants, including Ms. Chandni Mehta, are asking about how 2024 will be in terms of freight costs, and especially how high, we think can the freight costs go up to.
That is like literally plucking a number from thin air, because, like I said, I've given you an indication from 1500 to 5000 plus. It's gone now because of the last 3 months of consistent diversion, right? Now you do your math. For every month of delay, there's going to be an exponential rise in your freight cost. But how much it will go, how far will it last, when will it be resolved? These are questions. If I have an answer to, I would be a billionaire Benno. Sorry. But to take it seriously, it's not to belittle anybody's concern. Those businesses who are fortunate enough to have a point to point transportation, right? And they can actually enter into future contract rates if they are able to commit to a fixed volume of cargo. So like you have future FX rates, the banks are giving you 2 months down the line or 3 months down the line, you have future freight rates also that some businesses will quote you for, but that's dependent on the existing scenario. If they think the current destabilized scenario is an opportunity for them to make extra bucks, they may not give you a future rate. But generally, in industry parlance, it is possible to contract for a fixed rate for the future, provided you have certain volume commitments.
Sure. Thank you so much, ma'am. There are more questions which are already answered, much related to, the government and how we can encompass this entire situation. We will end the webinar here. For any more questions and queries, you're free to write to us on info@360tf.trade, as shared in the chat box as well. And thank you so much, Rajini ma'am, again for giving us this very, very insightful webinar. And I'm glad that also all these participants could join and take the best flavor out of decoding the Red Sea crisis. We thank you again, and keep in touch. Looking forward to having you all in the next webinar as well.
Thank you everybody for participating. I hope it's been useful. Your feedback is most welcome. Thank you very much. Thank you 360TF for having me. Yeah.
Thank you. Thank you, Rajini, for your time. Really appreciate the insights. And on behalf of our customers, a heartfelt thank you. I'm receiving queries on our info ID from all the people. One is for your presentation, and more questions are pouring in. So we shall circle back to you if we need some greater insights on this.
Yeah,
Thanks
we'll touch
again.
base and we'll try to answer everybody's concern to the best possible. Thank you so much.
Appreciate your time. Thank you.
Thank you all. Yes.
Thank you. Thank you so much.